Hey, my name is Connor and welcome to Crypto Empire, where I show you how to dominate in the crypto markets. In this video, we're going to be focusing on how to use the Fibonacci price retracement tool to pinpoint your entries and identify strong areas to take profits on the charts. So be sure to subscribe to the channel if you are not already subscribed. Leave a like on this video, comment down below, and make sure all notifications are turned on as well. And let the gains be with you. We're going to start out this video in TradingView, and the first thing that I'm going to do is go over how to set up your Fibonacci tool the way that I have it so there is no confusion involved. So after you make your TradingView account, I do have a referral link down in the description below if you do want to support the channel. After you create your account, log in, and then over here on the left hand side, and then the third indicator down, you want to click on the little arrow next to that. The first one will be the pitchfork, but if you come down to the middle, it will be the Fib retracement. I have it start as a favorite on my account, so feel free to do the same, but it's always going to be at the top of the screen after you do start, so you don't have to go over here in this menu every single time. Now that you know how to get your Fibonacci tool, it's time to set the tool up properly. So you're going to go ahead and select the tool, click on it, and then it doesn't matter where you draw, you just want to get it on the chart, okay? After you have it drawn on the chart, hit the gear icon, hit settings. These are the Fibonacci sequence percentages that I use to identify support and resistance on the chart. It happens time and time again. We're going to get into plenty of examples in this video. But after the 61.8, I also have the 0.65 measured in as well. And I call that the golden pocket, from the 0.618 to the 0.65. You're going to see price really come to that golden pocket like a magnet time and time again. I'll show you examples, of course. And then I have the 78.6 and the 88.6 levels checked. These are my favorite fib lines to trade. I love trading reversal patterns. If you don't know what the reversal patterns are, it's the W and M patterns. Be sure to go watch my other trading videos on supply and demand. Supply and demand trading goes hand in hand with trading the fib. So definitely go and check those videos out to get you up to speed quickly. But now that you have your Fibonacci set up just like mine, it's time to learn how to actually use this tool to identify strong points to enter into a trade on the charts. We're going to start out by looking at the Bitcoin chart on a 4-hour time frame. The first thing that my eyes go to is this drop-based rally zone over here. I'll just mark it for you so you understand. This drop, basing candles, and then a rally away from the zone. So this tells me that this is an area to mark off on the chart. So I'll go ahead and mark this in green for a demand zone. From there, we can already see that during the flash crash, price wicked down into the zone. However, we're going to use our replay tool so that we can pretend that we move back in time and that this didn't happen yet. So we can see that price is up here, and now we're going to look for a point on the chart to enter into a trade. So what we do is we take our Fibonacci tool. Before I go ahead and draw the fib on the chart, I'm just going to reverse it so that it's unreversed and there's no confusion for you guys, because I just don't want anybody to get confused. So what we always do with the fib when we're measuring a retracement is we take it from the swing low to the swing high of the move, because we want to measure the retracement of this upwards move. So what we're going to go ahead and do is take our fib and draw it from the swing low, and we're going to attach it to the swing high. So we can see on the chart that these Fibonacci lines do match up with levels of support and resistance on the chart, as well as some supply and demand zones as well. And I'll draw those out for you. Down here at the golden ratio, we have this zone. I'll mark that out. And also at the 38.2, this is clear support on the chart. See how all these candles never close beneath the 38.2? So I'll mark that out as well. So let's go ahead and hit play and see how it plays out in real time. So first, we have a move into the zone here, and we have a bounce out. So you could have taken this for a little quick scalp, but price quickly reversed down and started heading to make lower lows. Then we had the flash crash, and it melted right through the 61.8. So that's why you have to be careful and not go in with your entire position at one order. Because if you went in with your entire position at the 61.8, you would have gotten stopped out. But if you scaled in, you had some orders down here at the 61.8, some of the 78.6, and then the 88.6, you would have just gotten wicked into the trade and you'd be sitting in very nice profits right now. So let's go through some more examples so you have a better idea on how to use the Fibonacci. So I'm just going to pick a random pair on the chart. Let's go to the Chainlink US dollar chart. So we can see here that we have a very strong move down and then a very strong move away. So we would identify this down here as a swing low. And then this would be the swing high as well up here. And also you can see I have a trend line on the chart. Prices broke the trend line. I do trade with trend lines as well. Let me know in the comments down below if you want to see a trend line trading video from me. I would love to make it from you guys, but I need to know that you want to see it. So leave a comment down below right now. So with this fib retracement, again, we're going to take it from the low and attach it to the high. And we can see that price just came down to the 61.8 golden pocket. So again, you would place your entry on this level at the chart. You can see with these candle bodies all closing in this area, it would act as a level of support. So that is another confluence. You always want to be looking for multiple confluences with your fib lines. You never just want to place an order blindly at a Fibonacci level. Always look for multiple confluences, and I primarily use supply and demand zones. However, we can see here this is clear support on the chart with all these candle bodies closing. So we're going to go ahead and go back in time again so that you guys can see how it plays out again in real time. So price is up here, it starts dropping down. You have your order set at the 61.8. Bam, gets hit, you get filled, and now you're in the trade sitting in profits. I just want to go through as many reps as possible so that you can start to get a trained eye on how the fib really works. So let's just go back a bit in price. And now I will mention the Fibonacci is you're trading fractals, and fractals play out over and over and over again in the market, and it doesn't matter what time frame you are looking at on the chart. You could be looking at a 1 minute, you could be looking at a 5 minute, you could be looking at a daily. The Fibonacci and its fractals will always play out time and time again. Okay, so we'll go ahead and look at this one here. We're going to measure from this low to this high, and we're going to see what level this retraced to. Let's get these off the chart. So how we do it is we grab the swing low and we take it to the swing high, and we can see that again, price came right into the golden pocket. Okay, and if we look on the chart as well, we can see we have a rally base, these two basing candles here, rally base, rally zone. So we would go ahead and mark that. Price came into the zone. It did wick beneath the zone, so that is why you have to place your stop loss just underneath the level where you enter at so you can avoid these long wicks down. These are stop hunts, and then price continued upwards. So there's another example of a 61.8. I want to show you guys my favorite one, which are the reversals. I like to trade the W's and the M's. The W's in the bull market because where you want to go long. So that's when we have a very steep move down in price. We retrace up, and then we have a retest of this low that it created before a very strong explosive move up, creating a W. This plays out time and time again, but we need to identify a point on the chart where we had a very strong move down in price. So we're looking at chain link from back here in January. We can see we had a very strong move down, a move upwards, then a retrace before going higher. This is a W chart pattern. Let's see where it did retrace to. We take our swing low to the swing high, and we can see again that the 61.8 golden pocket played out again. This would have been your entry. Because we are in a bull market, we want to be taking long entries. When we enter into a bear market, we'll shift our trading style to go short. However, like I said, we're in the bull market, so my current trading rules is to only take long positions. Okay, let's look at a different asset. Let's look at Terra Luna, just randomly. It doesn't matter what asset we're looking at. It doesn't matter what chart. Technical analysis plays out time and time again. So looking at Luna, we can see that we have this zone down here. We have a rally base and then a rally continuation move upwards. So we'll go ahead and mark that on the chart. And I would identify this as a swing low, right? We have a pump up and then we retraced for 2 days before we had another explosive move higher. Now again, recently we had the flash crash. So let's see where price moved down to during this flash crash. Was it an 88.6? Yes, it was. We can see that price just nicked the 88.6. This would have been your sniper entry again. You would put your entry right here, the $11.76 level. You would put your stop loss just beneath the zone. And then again, you would take a 3-to-1 risk reward ratio, or you would take it to the closest supply zone on the chart. And as we can see, that's exactly what played out up here with this long wick upwards. We moved right into an area of supply. If I were to zoom in, these two candles up here, this would probably be a rally-based drop supply zone. And we can see we have the long wick up that went there. So the 88.6 would have been your sniper entry. You put your stop loss just beneath the zone, and you put your profit target at a 3-to-1, minimum 2-to-1 risk reward. But I do strongly encourage you to look for the 3-to-1s because you always want your winning trades to cover your losing trades. That is how you are a profitable trader. You're not going to hit a home run every time. In fact, you should be going for doubles and singles consistently when you're trading, especially if you are trading with leverage. You can get a large portion of your capital wiped out relatively quickly, and it can take you weeks to months to build it up, and you can lose it all in one trade if you're over leveraged or if you take improper risk reward ratio trades. So that is why I preach at Crypto Empire. Take your 3-to-1s, make sure you have solid risk reward ratios always. So let's go through some more reps because I just really want you guys to understand how to draw the fib on your own. It's very simple, it's not too complicated. You literally just take it from the swing low to the swing high, and then you have your retracement levels. But we're just going to go through as many reps as possible right now so that you guys have a seasoned, trained eye on how to trade the fib. So let's take a look at the RSR chart. I'm just going to clean it up. Get rid of some of this stuff. So I dropped it down to a lower time frame. I dropped it down to a 4 hour. And what you can see here, we have a move down. We have some basing, a move up, a retest, and then another move up. That's a W pattern on the lower time frame. So again, how we go about setting up the trade: first, we mark out the demand zone. We have a drop base rally. So I take the candle body high down to the lowest wick. And then what I would do, because we're measuring this move over here, I'm going to go ahead and grab the replay tool so we can go back in time. So we can see that price made this high here. Now we're going to wait for the pullback to enter into a trade. How do we know where to enter? Well, we use the fib. We take it from the low, we drag it to the high, and we can see here that the 88.6, the 78.6, and the 61.8 are all in the zone. So I would recommend scaling into the trade where you place your first position at the 61.8, your second one at the 78.6, and your final one at the 88.6. They might not all get filled. However, you're going to have a better average price in the trade in this case. Okay, so we're going to go ahead and hit play and see how it plays out in real time. Price drops down right into the zone, drops right into the 61.8. This would have been your first entry, and you would be sitting in a very nice profit from that trade. You need to identify reversals on the chart, drag it from the swing low to the swing high. It can work on any time frame. Just to prove that to you, I'm going to go ahead and drop it down to a 5-minute chart and show you that you can use the fib on the 5-minute as well. So my eyes go right to this area over here. We can see that we have a move down, move up. I'm going to retrace before moving up higher. We did end up retracing past that point over here, but by that point we'd have already taken profits and been out of the trade because we are on a 5-minute chart. This is intraday scalping, this style. So I'm going to go ahead and mark out this area on the chart over here. We don't have a clear picture. I'm even going to drop it down to a lower time frame so we can get a clear picture of a demand zone. So drop it down to a 2-minute. Now on the 2-minute chart, we have a better picture of what's going on. We can see that we have a drop base rally zone. So I would draw the zone by taking the candle body highs up here and taking it down to the low wick of the zone. And again, we take the swing low up to the swing high, and we can see that price dropped right to the 78.6. This would have been your sniper entry. How you would set it up: you would put your entry right here. You would put your stop loss just beneath the zone. Then you would take a 3-to-1. About right there, and we can see that it would have played out very nicely. This is a 2-minute chart, so you would have been in and out of this trade in less than an hour, and depending on if you did take leverage, you can make some serious gains by intraday scalping with just looking for the W's on the chart. So now that we have a few examples of finding price retracement levels, let's go over how to use the fib to find profit targets on the chart. So I'm going to go ahead and move it back up to a 4-hour, and then we'll use RSR again. RSR is a great example to use. We can see how it plays out time and time again by using the Fibonacci extension tool. So this little 2-minute chart that we use, it was in the middle of this move. So that is why fractals play out. It doesn't matter what time frame you're on. The pattern, how the markets move, it's human psychology, so the time frame is irrelevant. So looking at the chart, we're going to measure where RSR may go next with a high degree of probability when it does break the all-time high up here at 11.9 cents. By the way, guys, I did call out the RSR trade on video and in the Telegram group. Definitely be looking all the way from 8 cents down to 6.7 cents. Isn't the buy zone for me, guys. Not financial advice, like I said, but I'm expecting a huge breakout to the upside. Congratulations to everybody who made profit with that RSR trade. It was pretty epic. We've been waiting for RSR to break that 10-cent mark for months, and it finally did, and now I think we are headed to higher highs soon. So how we go about actually finding extension levels is we take out our fib and we need to put the extension levels on the chart. And again, I usually use the Fibonacci in reverse mode, so I don't want to confuse you guys, but I'm going to go ahead and switch it into reverse. And I'm going to check off my negative 61.8, my negative 1.618, and my negative 1 extension levels. These are the primary 3 extension levels that I use on the chart. Okay, so now how I draw the extension is I take the swing high down to the swing low that it creates afterwards, and then I measure where it's going to go when it does end up moving back up. So for this example, what we'll do is we'll take the swing high up here down to the swing low that it created after the swing high, right? When we're using the fib to measure retracements, we take the swing low up to the swing high that it creates after because we want to measure the move down. Now we're measuring where it's going to move up to. So we take the swing high down to the swing low, and remember I did reverse it. And then the first level that comes up on the chart is the 14.8 cent level. After that we have the 16 cent level, and after that we have the 19.5 price levels. So if you did want to enter into a long trade with RSR, I do see these being levels of resistance in the future. This is where you're going to look to take profit when it does break the all-time high. We can use this with any chart. Again, let's go head over to Ocean for an example. So here we're looking at Ocean, and again, we can see that we had an 88.6, it looks like, W chart pattern play out. Okay, so this one was a full retrace, but it didn't end up breaking the low down here. So if we wanted to measure where the Ocean price would go next, what we would do is we would grab this swing high and we would take it down to the swing low. And on the chart, we have the negative 0.618 level. It coincides perfectly with a supply zone, a drop, base, drop. I'll mark that out so you can see it. See what I'm seeing? Make it red. So that would be your first target. The next one would be at the $1.84. And then after that, we would be up here at the $2.03 level. So this is how you use the fib to find price extension levels, which are used for taking profit. The Fibonacci price measurement tool is an excellent tool to add into your arsenal as a trader. It's not the only trading tool that I use. However, I do end up using it most of the time combined with supply and demand zones because it's proven to be a very effective strategy for taking high probability trades. If you have any questions about trading the fib, definitely go ahead and join my free Telegram group where you can chat with me directly or just leave a comment down below in this video. I hope that you enjoyed this video. I did end up making it because I had so many requests from Telegram group members as well as just people in my DMs asking me to make a video about how to trade with the Fibonacci. I hope this cleared some things up for you. Remember that you have to put in the time on the charts. I know it may be confusing at first. It may be hard to understand where to draw your lines and everything, but after you get the hang of it, after you put in enough time studying, it will be like second nature for you to draw strong Fibonacci levels on the chart and end up becoming a profitable trader because of it. So definitely add this tool to your arsenal of tool belts as a trader. Hope you got something out of this video. My name is Connor from Crypto Empire, and we'll see you in the next one.